All right, so now let's talk about just your current book and your current, I guess, longs and on the
Yeah.
yeah. So go for it. The
So the energy names I really like, and so the names that I'm invested in the energy space right now, there's three big ones that I really like, and the first two are Kinder Morgan and Williams. These are the
right.
transportation companies, and the reason I like these, it goes back to before, right? There are no large scale pipeline operations in the U.S., and if you take Williams and Kinder Morgan and put their networks together, you touch about 70% of the gas in the US in one way or another, whether from transportation, gathering, processing, whatever. You also have the two dominant pipelines from the Houston Ship Channel to the Northeast United States. Roughly 60% of the US population, these two are serving everything. The fastest growing part of the population is the Southeast US. Kinder Morgan, Williams, the dominant pipeline companies there. So that's why I like them. Put aside the fact that last March, when COVID hit and the stock market tanked, you could have locked in 10 to 15% yields in these things. Even today, they're still paying 5-6% dividend
Yeah.
yields that are growing 10-15% a year. So, I look at it this way as like, you have Massachusetts, we have the Massachusetts Turnpike. That's the only toll road in the state. And it goes from Buffalo, New York to Boston, Mass, right? It goes right from the Mass Turnpike to New York State Thruway. Every day there's more and more cars on that road, but that still is the main road to get there. And they're not building another one anytime soon. That's how they look at the pipeline companies, right? They're just maintaining these pipes right now. They went from a period of, their balance sheets were over leveraged. They spent the last 3-4 years deleveraging these balance sheets. They have their debt to EBITDA exactly where they want them. They're self-financing operations. They don't need any debt to operate anymore. And they're throwing off huge cash. Williams just announced a large buyback of, I think, $1.5 billion. Kinder Morgan's in the middle of a $500 million buyback that honestly I think is ridiculously too low. And I hope that they fix that when this one's gone and they add another billion or two to it. But I think if you flash forward 3 to 5 years, you'll be in these stocks. You'll have good price appreciation, but better still, you're probably going to be getting on a cash invested. This is the way I look at my dividends. You're probably going to be getting 7 to 8% yield annually in dividends on your cash invested, if not higher, given the cash we're throwing off right now, and the buybacks and the dividend increases that you're doing. So I love those two companies.